The broadcast is now starting. All attendees are in listen-only mode.
Hello, Pace. How's everyone doing? What kind of face do you have? A happy face, sad face, like, those little icons? Anyone happy in here? I read Blake's coffee maker broke, so he might be a little out of sorts. Hope someone ran to Circle K for him. Poker face, Slavish, okay. That's what I like. That's a player. So here we are. And before I get to the markets, I just have one thing to say. This weekend, I was walking through Forest Park one day, the merry month of May. I was tired of my broker, so I called Trent, who told me they were a joker. And he found me a better broker, so I waved bye-bye to the old one. So if anyone's having those feelings, they feel they're not getting good fills, spreads are too large, tired of the platform, doesn't run fast enough, get a hold of Trent Orr at Forest Park FX. He knows them all, not just here in the US, globally, knows about the safety of your funds, which is to me the most important thing. Where you park your money, want to make sure that, if you're making money in the market, you're not with an FX company that's going to abscond with your hard work. Amen out there? It's happened. So you really need to do your due diligence when you select one. If they're in Belize or Maldives and some of these jurisdictions, not as tough as the NFA, CFTC, what they have in the UK, and some of these other ones are making Cyprus look like a, choir boy. Okay, so buyer beware. So I want to talk about a turnaround Tuesday candidate. People have been following me on Twitter and my group, the Eagles Nest, here in Face, interviews I've done. When we were here in the NASDAQ, I was talking about it being incomplete. And now we're on the verge of a third drive up here in NASDAQ. But if you notice the RSI structure on it, this is a daily. I mean, it's still diverging from here, but it's equaled here. And we're not at price targets that I want to do anything about, like, buy some bearish like TQQQ or bearish semiconductors, or the banks have been lagging. But the NASDAQ leading the way with Russell even stronger, I think is due for a pullback. As it's not just getting to a price level. For me, it's how it gets there, because if we're confirming the move, then even if we're at a price target, I won't short it until I start to see momentum waning. Okay. Even with momentum waning, you can be early in the market. So look at the momentum here on the daily, the 4 hour, look at that. It's pegged up against the ceiling. 1 hour, coming off a little bit here, but still, you have like an 82 reading. You have all these readings starting to diverge here. But now look at the RSI structure in the S&P on a daily, well under 80, right? 4 hour diverging from this last top. Also, this was a big breakout area, just like Bitcoin. Why is it giving me, I don't know, a few days to buy the breakout? Why aren't we at 27.80 right now? So we start trading under 27.40. As you can tell on the 4 hour, there is a momentum divergence. And on the 1 hour, it's glaring between here and there. So, maybe it's going to be a third drive to a top, but I think that it's the potential turnaround Tuesday candidate, not because I'm bearish, and I think long term, but I need some type of pullback in the NASDAQ. So the weakness has to take it there so that as we're charging towards targets that I'm looking to get short at, momentum is waning, not continuing to build is in intensity. Everyone with me on that? So the preferred short for turnaround Tuesday is here in the S&Ps around this 2750. Risk 10 handles to make 20 to 30. Let it breathe. In case I'm not perfect. Let your trades breathe. If you can't risk a daily ATR on an instrument, I wouldn't trade it, because if you can't be wrong for a day, if you're a swing or position trader, how can you be right for a week or several days or a month? Anyway, that's my view there. Just wanted to cover it because I think it's a possibility for today. I couldn't find many other setups that I had that type of fairly glaring divergence in the S&Ps with a market that's just broken out that either has to get in gear or it's a trap. Okay. So we have a great interview with Greg from Panama Orange. Greg is charting. It's really interesting. Seen him make some great calls in the metals. Just a quick look at the metals here. I still think the silver has another washout left in it. It tried to turn good, couldn't get through 1850. Maybe on this attempt, back through 1650, I'm all wet and the silver's good. Still favoring some type of washout here, although today it looks like it wants to come out of here. But you could see how many hits we've had at 1630. We got to close under 1630. Under 16 is next. And it probably is going to tie in with the yen, which got up to 110. That was a great entry. Still thinking that there might be a chance for 110.20-ish, but closing back under these tops here. Yesterday you had like a rectangle right here. So if you could get the yen back under 109.70, it's going to look good. RSI reading, not really glaring divergence, fairly equal. But now if we had one more shot up to 110.20, I'd be pretty interested. Okay, I'm going to let my partners cover that for you, Nareej. And I'm going to bring Blake in now. I hope you found some, I don't know, Nescafe or whatever that instant coffee was that they'd have in cheap hotel rooms.
No, I don't know what's up with my coffee maker. I think I need to run some vinegar through it. My coffee maker went down today. Yeah, and I'm not too sure what's up with that. Anyway, hey, we just had a headline come out from Kudlow saying that the NAFTA talks may be split, which may help negotiations a little quicker between Canada and Mexico. And so we've seen just some volatility come in to those particular pairs. Let me get over here.
Blake, I interviewed Kudlow once, and it was before, it was during the campaign for the nomination. And I asked Larry what he thought about Trump, and he said, no good. Now he's working for him.
Right. Well,
what do you think of that?
I mean, talk out of both sides of your mouth, right? I mean,
Huh? I mean, you can like him. I said, what do you think Trump's chances are? Not good.
Yeah, well,
unquote. Yeah. So maybe we shouldn't listen to his economic forecast either.
Yeah, I mean, well, the thing is that it affected the dollar Canadian. The dollar Canadian just spiked down to 129.50, and it's back up to where basically it started. But you should see the U.S. dollar Mexican peso. We just hit 127% extension of this last move here. We blew through the 618 retracement. Really big moves in the peso and the Canadian right now. So
Holy crap.
yeah. So really big moves here in the dollar max and the dollar cat. So
that looks like a SpaceX missile, man. I
what's
wonder if
that?
it looks like one of Musk's SpaceX missiles.
Yeah, it does, doesn't it?
I wonder if it'll be able to land like his does. Boy,
I don't know, but
getting parabolic, man.
We are a bit of parabolic right at this moment in time as the dollar max continues to spike up. I mean, this is a pretty big move here. I mean, we were just kind of cruising through 2025, and then we just hit 2045. I mean, that's a big move in the dollar max thus far. And we've seen a little bit of volatility in the dollar, mostly, well, you can see stocks are coming under a little bit of pressure here. The euro dollar is just kind of, it's all over the map. It's really not doing a whole lot. The pounds, we had some good economic data out of the pound. But the dollar yen is coming off, and the dollar yen is nearing its lows of the day. One of the things about the dollar yen, I tweeted about the bond market today, and the thing about the bond market is you can see here, where is the bond market? Here's the 10-year. Okay, and here's the 10-year. So we came out of that descending wedge. We came and we stopped basically at the breakout point, and then we're bouncing, and we should get a lift from here. It's also the 618, and so we talked about this yesterday about us finding some support down here, and we have. So with bonds bouncing, yields are coming down. The dollar yen is now coming under a little bit of pressure. You can see that the dollar yen, as a result, we're at our lows of the day, or near our lows of the session, and the dollar yen could make its way back down towards 109, quite possibly, especially if the bond market continues to firm and yields come down, and yields are breaking lower as we speak. Futures are coming down as well, and so let's go over to the S&P, and Dale, hold on. You can see here's the S&P right here. You did talk about the Nasdaq having some unfinished business up here, and the Nasdaq has rallied quite substantially, actually, and has made some really good gains. And we could show a reversal soon. And let me take a look at the Nasdaq Composite. Hold on, Nasdaq Composite. Let me get over to the. I don't want to use I want to use the actual index is what I wanted to do. So here's the Nasdaq Composite, right? And the Nasdaq, we have the 161% extension. This is the post, .com bubble move, if you will. Let's see, right there. And we came right to that 161% extension. We're basically there right now. So, the Nasdaq could very easily turn from here. And it is, as you rightly pointed out, it is turnaround Tuesday. So, we could start to see a little bit of a reversal, in stocks. And if that happens, then we might have, some of these yen pairs come down, whether it's, dollar yen, euro yen, pound yen. The euro yen's showing some signs of weakness here. Here's the pound yen, showing some weakness as well. Aussie yen is weaker as futures come down. The RBA kept rates unchanged, but as expected, and the Aussie came off some really key resistance. Take a look at the Aussie. This is pretty critical from last night. We couldn't break above this trend line. Actually, we challenged the underside of this trend line here, so the Aussie has turned lower. I don't know about how comfortable I would be about playing the U.S. dollar long necessarily, or short with the Aussie, especially with futures coming down, because the Aussie yen may come down as well. So you could play like the Euro Aussie on the long side, or the pound Aussie on the long side. Something like that might be a better way to play Aussie weakness, because this doesn't look like it's gonna happen. I'm going to get rid of those slides there. So, because we couldn't make it over this trend line, but we basically just challenged the underside of this trend line here. So yeah, I mean, you know, it's some, you know, we're seeing a little bit of volatility, and actually the volatility really just came, you know, just came with the Kudlow comments, and that's kind of put the futures in a little bit of a tailspin here, and it is also, you know, created a little bit of volatility in these yen pairs as well. So, and you know, I was talking to the guys in the office about the dollar Canadian this morning. I'm like, you know, the dollar Canadian from where we currently sit, it favors shorts. Okay, it favors a short from a risk reward standpoint, but with the NAFTA, the ongoing NAFTA negotiations, you know, we could end up having a situation where we end up getting a breakout, especially if you know, it looks like the NAFTA negotiations are indeed falling apart, and we're getting you know, some risk of them falling apart, which, you know, with Kudlow's comments saying that you know, maybe we could hurry along the NAFTA comments or NAFTA negotiations if we split up the negotiations between Mexico and Canada. You know, I would think that would favor the Canadian currency. You know, the dollar Canadian would come down, but that's not the case right now. We're seeing the dollar Canadian actually, it spiked lower, but now we're coming back up again. So I don't know. It's going to be a tricky play. I'm not really too sure what to do with it right at this point in time, without further information from you know, the White House, and whether it's Larry Kudlow or Donald Trump himself. So this is a very, very tricky place to be trading the dollar Canadian, and it has been. I mean, look at it over the course of the last you know, couple weeks. It's been very, very challenging to try to get anything directional from here. So so I don't know. I don't know. My favorite trade right now, Dale, is going to be short the dollar yen. I mean, because if yields are coming down, which they are, you can see yields are clearly coming down, the dollar yen should reciprocate and come down as well, and especially if futures are selling off here. So
Yeah, it makes a lot of sense. So I think we also have a pip on it from Grega.
Of what? Of
short yen. Short yen.
Oh, the dollar yen, you mean?
Dollar yen, yeah.
Got it. Yeah, I mean, it makes, you know, to me, it makes a lot of sense. And I'm more, you know, at this point in time,
there's a lot of risk out there, man.
There is, and you take the stock market, it's sitting at, you know, all-time highs here. I mean, the risk is, or the Nasdaq's at all-time highs. The risk is we start coming off, you know, soon, and turnaround Tuesday, I don't think is anything we should scoff at. I think it's the potential is there.
Let me ask you this, Blake. You've been around for a while. When's the last time you saw the Nasdaq making new highs, and the S&P's not even be able to retrace 61.8 yet?
Well, usually that's the loss leader situation where you have the Nasdaq plowing higher as it leads the market higher. But I don't know if that's necessarily going to be the case today. Wow, watch this dollar Canadian. This dollar Canadian's about ready to spike through 130.
But I mean, I haven't seen that wide of a gap between those indices in a decade or longer. I can't remember Nasdaq being at new highs and the S&P's being 5% or more underneath it. That's pretty glaring.
It is, and you know, it's very divergent at this point in time. You know what else I was looking at this morning is I was looking at the Russell. Remember, the Russell has been moving higher as the equity market, you know, just kind of plowing higher.
It's been the leader.
It has been the leader as of late, and we've kind of seen a bit of a you know, it's not. Well, I guess it is still. it's relatively strong. So, but I don't know if these charts. I don't think these charts are updating, because I was looking at my Russell futures here, and they are not here this morning. I don't know if this chart is correct, actually. I don't. I trust my Bloomberg data more than this. By the way, the euro dollar is coming down as well, the euro and the pound. But I think that's a lot of it having to do with the euro yen getting the smackdown at the moment. So yeah, so we have some volatility. Like I said, the dollar Canadian here at 130, not really too sure what to do with it. The dollar Swiss is trying to get a little bit of a lift here, but I don't know if I'd necessarily believe that. But yeah, the euro's a little weaker. Like I said, the dollar yen, this is really my focus today. As long as yields continue to stay weak, I think the dollar yen is going to continue to stay relatively weak here as well. So, you guys got to watch this dollar Mexican peso. I mean, we just hit the 127% extension, very strong. Both the U.S. dollar Mexican peso and the U.S. dollar Canadian have spiked up because of those Kudlow comments. So, I guess the bottom line here and the takeaway is at this moment is that NAFTA negotiations are not going well. You know what I mean? So as long as NAFTA negotiations are not going well, the Canadian and the peso may continue to stay under pressure unless we see some of these talks start to head in the right direction. So,
Mueller negotiations aren't going very well either.
No, I haven't really stayed up to date on what's happening politically.
Well, he's saying he could pardon himself. No, he has absolute power.
Yeah, well, maybe he does. Maybe he does.
Yeah. We'll find out.
Yeah, maybe we will. Maybe we will. So, hey, and by the way, I was, as far as the euro goes, I've got a little position on the euro long. I don't like how it's coming down here, but we could come down to 116.50, and just to retest this broken trend line. We haven't had any lift here. I still think we might be building this head and shoulder pattern, but the euro dollar needs to really start to turn higher soon in order for this to play out. So, and the euro is stayed relatively weak, and I think a lot of that, like I said earlier, is because of the euro yen coming down quite a bit. And let's take a look at yields here. So this is a pretty good view of yields. Basically, what I was illustrating with the bond market. Yields have let me remove this. I haven't looked at this since this chart specifically since I was on.
Probably still have a ton of bond bears short.
I would think so. I don't know, that squeeze was pretty wicked last week, and of course I was gone, so I missed a lot of that squeeze, even though I had a pattern in play. I had the guys.
You covered perfectly at the on the road. It was
I was on the road, and I made sure that got done. But yeah, you can see, and it's probably somewhere down here as yields were kind of crashing lower. But it looks like the yields want to head back down again. And like I said,
good car trade, man.
Yeah, I can't remember where it was. It might have been from the beach
Yuma
or something.
I think Yuma. You were in Yuma.
Yeah, I don't know if I was in Yuma or not. I tried to get through that town as quickly as possible. So anyway, like I said, I like the dollar yen. This could be setting up a nice head and shoulder pattern too. I think that this is quite possible here, like something that looks like this, with a head and shoulder. I think that's possibly setting up, but overall, I'm really kind of focused on the dollar yen short as far as the yields go. I want to see if the euro can show any signs of life. The pound is holding up all right. I mean, the pound, it's not really getting much move higher, any love, because with this risk aversion, you're seeing some dollar strength. And so the pound's just kind of floundering around. But we had some decent PMI numbers that come out overnight. I think it was the services PMI came out better than expected at 54. But right now it's all about, risk on, risk off. And if it's risk off, that these yen pairs may continue to trade a little heavier, I would think. So, and that's what's happening with, that's what's dragging down the pound. I think the pound yen is probably feeling a little bit of heat right now at the moment regarding this risk off activity that we're seeing. Aussie's under a little bit of pressure. So yeah, that's what I'm looking at right now. Let's see if Steve has anything that he's looking at in particular. Steve, are you there this morning?
Hey, mate.
Hey, good morning, Steve.
Good morning. How have you been?
Good. So, hey, I know you were pretty bullish the equity markets, rightly so, over the last couple of days, and the S&P looks like it's struggling up here at the 618. We're having a little turn in risk appetite this morning. How are you feeling about the stock market here?
Okay, I think it can pull back. I mean, we are in some type of slow ascent, but I do think that 2,800 should eventually be hit. So I remain bullish as long as we remain above last week's low, which comes at 2,675 roughly, if I remember the number. So I do think it looks good from there. I also see the potential. We were showing that last week with Dale. I'm also seeing the potential that the Nasdaq is in a large ascending wedge, in which case it would make sense to see a new all-time high before it pulls back, and even then once more the 127% extension of the last move lower comes at 7,430. So that looks good to me as well. I don't see any real. Of course, we have to remain very cautious because, unquestionably, after the strong move lower we had at the end of January, we don't have like 100% proof that we've reestablished the uptrend. But I do think that the more the days pass and the indices are not breaking lower, the higher the chances that the correction has actually finished. We corrected mostly in time than in price, and we're resuming in the long-term trend, which is higher. Now, I'm not obviously optimistic that this is something that's going to be lasting forever. I do think that sooner rather than later, we should be seeing some type of a very significant top, but that might come like in 3 months, in 6 months. Who knows? Up until then, I think we should keep respecting the trend.
Got it. Okay. So, what's on your radar today?
As you said, first of all, you also wrote it in the chat room. I saw it because I made the same comment afterwards. We now saw the CAD low comments, and we're seeing that USD CAD and USD MXN are responding in a totally different way, which tells me that the market obviously believes that this kind of separation, if it happens in the NAFTA negotiations, probably will happen to give a better treatment to the Canadians than to the Mexicans, right? So obviously we're seeing a divergence there in the response. Now, other than that, we're seeing dollar being a little bit strong, but to be honest, I'm still not persuaded that dollar is headed to new highs above 95 from here. I think that it's likely that we're seeing some struggling for the dollar to give back some of its recent gains, but I would still, I still hold my Euro USD long, and I would still be expecting that the chances of another pullback towards the 92.50 area are quite high, actually. So I'm not, I'm not intimidated by this. I think that the fact that after very strong data on Friday and the NFPs, the fact that we didn't get a push higher due to that, to the dollar, is telling enough. And as long as that proves to be the case, I will be very cautious about being long the dollar until we see like a stronger pullback.
Yeah, the dollar, I mean, is just it's kind of floundering around here. So I'm not very convinced about the dollar itself. I think where all the action is going to be in the Canadian and the peso as well. All right, well, I'm going to pass it over to you and Stelios, and I want to say, if you guys have not visited Forest Park FX, our sponsor for the Face webinar, make sure you do. They are there to help you find the broker that you're specifically looking for that will be to your individual needs. And we're going to have one of the principals, Justin, who's going to be speaking with us on the 22nd. Is that correct?
Yes, that is correct, Blake.
Yep.
It's a
All right.
22nd.
That's going to be great. So, well, thank you, Dale. Thank you, Steve. And I'm sure Stelios is going to be popping in. So you guys have a great trading session.
You too, bro.
Thank you, mate. See you in the chat
Thanks,
room.
guys.
Bye-bye,
All right,
mate.
bye-bye.
Hi,
Hey,
Steve.
Dave.
How are you,
How are
buddy?
you? I'm good. I'm good.
Good.
By the way, here's the USD CAD toying around with the 130 level once again. As you see, this has been very strong resistance. I think it's more than obvious that USD CAD is finding it quite hard to resume the upside. I mean, obviously the upside momentum is somewhat lacking. I think that even if we do break finally about this 130 zone, then we will be facing this confluence of resistances at 130, 130. In which case I would still remain extremely cautious. As I said, I've taken the decision to just abstain from trading the USD CAD because I think there are much better opportunities out there. But I have to tell you that if I was, forced to be something the USD CAD at the moment, I wouldn't be long. Most probably I would be short if I had to actually do something. Now, on the other hand, we're seeing that the USD CAD jumped a little bit and is struggling with 130. But on the other hand, Blake already showed it, so I'm not going to stay much here. The USD MXN, breaking above the 61.8 of the last move lower, testing the 127.2 of this corrective move, has penetrated through this ascending channel. So obviously, it's all about how the daily is going to close, but definitely if we stay above the channel and 127, the next area of resistance we should be looking for is the 2080 area. As we see, the RSI is also displaying this bullish break. So USD MXN remains definitely very, very well bid. Now, two things that I need to stress out here. We were very extensively talking. Even, I don't know, those of you that watched it, that happened to have watched it, Joe was on Bloomberg yesterday.
Great job by Joe.
Yeah, he did a very good job. They spoke about the Aussie, about the dollar, and the Aussie is currently at a very critical level. You can see here why. Even if I zoom out, you can see that the Aussie is actually more or less in this general area, in the general vicinity. We have multiple areas of resistance, which is one of them is the 7640 area. You can see if I zoom out, it has acted as support resistance multiple times. It's also the, you can call it a bear flag until proven otherwise. The bear flag is resistance. And yesterday, that we actually intraday penetrated through it, we got rejected from this long-term ascending trend line that is now broken. So that actually rejected price action yesterday and helped the pair close right on the resistance, as I mentioned. And today we're pulling back from here once again. So in essence, the Aussie has not confirmed a break higher yet. And until it does, you have to respect the potential that this is actually a bear flag, and there is more downside coming. Also, the Kiwi seems to be a little bit stronger. I mean, we closed above this flag yesterday, but one way or another, I can't say that we've confirmed. I mean, obviously now there is some soft area of support at 69.70. So as long as we trade above 69.70, I could totally understand why somebody would have a bullish bias in the short term, being cautious, of course, and using proper risk management. But on the other hand, just to give you an idea, we had a meeting Stelios, Blake, and Joe yesterday, and I, having to do with the Kiwi, because they wanted on Bloomberg to talk a little bit about the Kiwi. So we were discussing, what's our view on the Kiwi. And I have to tell you that, all of us agreed that the outlook for the Kiwi is not like so clean at the moment. There are only two certainties with Kiwi. One of them is that this 69 area of support is a very significant area. You can see, if I zoom out, you can see how long it dates back. It has acted like half a dozen times at least as support resistance. So one thing is for sure, that unless we decisively break above this, below this 68.70 to 69 area, we remain cautious in being too bearish. But on the other hand, as long as we remain below this broken range, this range is broken support, which comes at 71.80, more or less we would refrain from having some kind of a bias. I mean, I'm personally tilted in being more or less bearish, but very cautiously, and I wouldn't be doing something right here, right now, which means that I'm not really convinced, even by seeing this jump higher, I'm not really convinced that I would definitely need a lot more to be looking for more upside in the Kiwi, right? So since Blake made the very correct comment yesterday, he was showing to us when we're having this discussion how the Aussie leads the Kiwi and not the other way around. Since the Aussie is still holding that bear flag and that critical key area of resistances, I would be quite cautious with the Kiwi as well. Okay, so this is what I wanted to talk about, having to do with these pairs. And I think it remains quite important to see the Aussie breaking out from there before deciding on a direction. Now, if we go to the equivalent yen pairs, which means the Aussie yen and the Kiwi yen, you can see that the Aussie yen is still holding within a channel. That can definitely prove to be like a pair flag. So here as well, I would be quite cautious in turning bullish. And this is Kiwi yen, which on one hand it falsely broke below the 76 area, but on the other hand, even now that it has come above it, it has failed to breach the first area of resistance, which came at 77.60. As long as we remain below that, I would remain more or less bearish. Okay. Now let me have a brief look at the yen. You remember we were talking about 110 yesterday. So 110 is still holding as resistance. As long as that's the case, I would definitely be considering the possibility of another move to the downside. Now, having to do with the euro and the pound, I vocally expressed then just before my opinion that I'm not yet convinced that this is all the correction we should be expecting from the dollar. In which case, I mean, I can see why somebody would consider these moves. Let's say we're having a look at the cable at the moment, like little consolidations before it's zooming higher, and indeed that might be the case. But in my opinion, the reward to risk ratio does not favor being short, because even if there is one more low coming, it's not going to take us far away from where we are. I think that both euro and the pound are due for a rebound higher. We might have already seen the low. I mean, some kind of a short-term low. I'm not advocating that we're headed to new highs. Obviously not, as I've said plenty of times. I would be looking for a bounce towards the 136 area as a shorting opportunity for the cable, and more or less the same applies with the fiber, the Euro USD, on any jump anywhere between the 118.50 and 120 areas. I think in between there we have multiple resistances, and I would be looking to the downside from there as well. So let's go to the DXY. I'm really not very much persuaded that this huge candle that you see here was, all of the correction we should be expecting. I'm viewing this as one strong move lower. I'm viewing the past 4 days as consolidation, market digesting the reversal we had. And I do think that we should see a resumption to the downside to at least come down to the confluence of supports anywhere between 92.50 and 92.80 within that zone before I can start looking to the upside once again. So unless we get down there, I would definitely not be buying the dollar. I've actually sold some dollars against the euro, right? Now, we were talking about the indices, so let me show what I was telling Blake. I think that the Nasdaq, if you remember, Dale, we were discussing that together, like it was several weeks ago, the possibility of an ascending wedge. So far, so good. It's been playing out very nicely. I know that we're now testing the all-time high, but I see no reason why we shouldn't penetrate through that, perhaps test the resistance, get rejected, perhaps one more high before actually seeing like a bigger reversal. IWM pushing the Russell, pushing to new highs. I think that the next area of resistance is the 127.2 of this corrective move lower, which comes at 165.56. Until then, I don't see much of a resistance. Dow Jones definitely underperforming the vast majority of the indices, but still above this broken trend line. So it also looks more or less, bullish. Nikkei got rejected perfectly from the area. We were looking at the 23,000 area, but found support at the 22,000 area, which was, an area we had already indicated as a possible area of support. So as long as it remains between those two levels, I can't exclude anything, which means I can't exclude the possibility of one more low from here. I also can't exclude the possibility of just, penetrating through the 23,000 area, in which case I would be looking for new highs, right? So because I do think that the next time we break above the 23,000 area, we're actually going to be breaking above the 24,185 as well, sooner rather than later. The DAX also played out very nicely, found support at the 12,600 area, now testing the 12,900 area as resistance once again. So this is once again a critical level. If we do get rejected from here, I even see the possibility of actually pushing lower, like for an ABC or something like that. If we do break above 12,900, I do think that we are going to be testing the all-time highs sooner rather than later. So DAX also currently on a critical area. FTSE, I think FTSE looks more clear. It had an amazing parabolic move higher from very oversold levels to all-time highs. Now we saw a first leg lower, tested perfectly the area of support we were expecting. But to me, it seems that like this rebound is more or less bound to fail, in which case I would be looking for at least a retest of the 7,600 area, if not lower, towards the 7,430 area before actually, reestablishing some bullish momentum. Obviously, that also bodes well with the probability of seeing the cable rebound higher than it has already done so. So that would actually play out very nicely with seeing a rebound of the cable towards the 136 area. So that's also something to keep in mind.
Steve, before you continue, and I don't want to forget, we have our friend,
yes,
hello, by the way. We have our friend Hussein, who's asking if we record and where we have the link for these recordings. We have a YouTube channel. So if you go to YouTube and you search ForexAnalytix, you'll find us there. We have all the previous, well done. We have all the previous webinars and anything we post, basically, any videos, they're all there.
Yeah, even Joe's appearance yesterday on Bloomberg is there. I mean, we have everything from tutorials to our platform, to the daily webinar recordings, to the interview recordings, to
videos, everything.
Yeah, exactly, absolutely everything. Yeah, exactly. So you can find if you miss like a webinar or whatever, you can always find it. Like it gets posted there a couple of hours after the webinar is over. We edit it, like putting intros and things like that. We're not editing the content. I mean, we're not removing or adding content, and then we're putting it up there. You can also find past interviews. Some of them are very interesting actually to watch, even days or weeks after they're done. Let me see. We have questions. Hi, is there any chance of USD-MXN reversing soon? Yes, there is, but we have to get some news for that to happen. For the time being, it looks strong to the upside. currently testing resistance. So some type of a pullback from here looks likely, but we need more evidence, to call a high. Nifty 50 divergence and its level now. I don't quite understand the comment, but let me have a look at the Nifty so we can. There it is. Okay. Yeah. Nifty got rejected. Perhaps one more leg lower. Right? Or a triangle, because this can also prove to be a triangle. Multiple interpretations here. So this can also prove to be some kind of a triangle, right? Some type of a correction taking place here, though. So this might be one scenario. This might be another scenario in finding support lower before moving higher. I think we have to give it a few more days. As we've said about all indices, after the strong move lower that we had at the end of January, you need more price action to determine the exact nature of this correction for the markets. Sometimes you just have to be patient. There is no alternative to that. Price action will only tell. Trump strategy, divide and conquer, not taking as a positive from Canada's point of view. Mexico ditto. Yeah. Divergence down, Nasdaq just like 99. Yes, they do. They are diverging now, but let's be honest. On the other hand, we had a little period that Dow was overperforming all the indices, if you remember, just before that mania phase that ended at the end of January, that blow off short-term top. We had Dow overperforming the indices. Jumped questions from USD Yen. They asked about why you think it will go down with such a big risk. Is it possible to elaborate on why you're confident? Probably that was a question for Blake, seeing the timestamp. So you can ask Blake tomorrow to answer that. People got even more net short per CFTC data from Tuesday after the big surge in treasuries. Hi there. Usually you have a link for the recording for later watching. Yeah, you answered that. USDZAR and USDTRY. Let's have a look at them. I already showed you yesterday that USDTRY is within a corrective move, but I really have no reason to view this as anything else as a corrective move. So I would be expecting like one more push lower and then higher once again. USDZAR, I'm monitoring in USDZAR. Let me show you the chart. I'm monitoring the USDZAR, the possibility that this is now an ascending wedge. So I would be expecting something like this happening. Okay. So seeing at the loss of momentum here, one more high, perhaps one more low, one more high. This is a very critical area, just above, it's somewhere at 1310, 1315. And then I would expect some kind of a failure and a resumption lower. Because if you remember, I said since the beginning that I'm viewing this move higher in USDZAR purely as corrective. So more upside in the short term looks likely, but I would expect that this would fail sooner rather than later, and it would resume to the downside. Okay. This is my view in USDZAR. I think that the price action is now more or less quite indicative. So I do feel like I have a very good understanding of what it's trying to do from here. Now, having to do with the euro and the pound yen, because I just got a question about the pound yen, but it's a good opportunity to also mention the euro yen. As I've said, I'm monitoring closely the 147.50 area as a possible area of resistance for the pair to go belly up once again and resume the downside. And the same applies. We actually got a very nice rejection so far. If you remember, since the first day of the recovery here, I said, okay, this looks like it's the beginning of some kind of a corrective move. In any case, I would be looking for 129. 129 was not exactly hit today, but as you see, and I've said it multiple times here on the show, for me, the market is never perfect. So it's not like 129.000. I always have in important levels like zones, right? Usually those zones are might be 20, 30 pips wide, right? So we've actually entered this 129 zone. And so far we seem to be stalling. So I would want to see like a rejection from here, and if I do, I'm going to be liking the possibility of a resumption lower from here. Okay. Dale, by the way, I forgot to ask. Yesterday we had a cancellation in our guest. Do we have a guest today? I'm guessing we do, huh?
Yeah, I'm looking for him. In fact, Matt, if you're here, can you ask a question for me? Or if you're signed in as Panama Orange, ask a question so I could find you in 10 minutes. Otherwise, go ahead, Steve.
Okay. So what is our guest going to talk to us about?
He has some real nice charts, follows the metals very closely and indices. So that's what I'm expecting. Probably some looks on gold and silver, etc.
Okay, very, very nice.
I never know, Steve. You know, I don't script any of my interviews.
Oh, I know, and you don't need to.
Yeah. Okay. So I never know what I'm gonna.
No, I mean, but you always know, your guest what they focus mostly on. That's what I asked.
Yeah. Okay.
Okay, great. So another pair I wanted to show is the euro pound. I've said many, many times that in all honesty, I wouldn't be trading the euro pound as long as it remains trapped within this. I think now it's 9 months that we've been trapped in this slightly descending channel. But on the other hand, I can't stop myself from watching this little descending channel in here. So this is something I'm monitoring. The end game, in my opinion, as I've said multiple times, I would ideally want to see a break lower from this channel, one more push to the downside towards the 83.30 area before eventually moving higher. So I still favor the probability of the channel, breaking to the downside than to the upside. Now, speaking of metals, because if you remember, I showed it yesterday when it was making another attempt to break out. No surprise, it failed. Platinum, here it is. Was testing, for 3 consecutive days, was testing resistance, failed once again to break above it. So, platinum still not ready to do the next move. Palladium struggled with the 1,000 level once again, failed it. Something, the more I'm looking at platinum here, at palladium here, sorry, the more I get the idea that it might want to have one more stab to the downside before actually recovering. So there is still a bullish scenario, a bullish Elliott wave count that I'm looking at, and it still hasn't been invalidated. But on the other hand, I don't know. I keep feeling that. Let me draw it here. If this trend line here fails and breaks to the downside, I do think that we're going to see some extension, perhaps another move towards the 900 area. Okay. Now, having to do with gold and silver very briefly. Gold, exactly as platinum did, once again rejected from a trend line. For platinum, it's a descending wedge, which is more of a bullish formation. For gold, it is a descending channel. As we were saying yesterday with Blake, we would really want to see a break above 1300 and even a little bit higher, 1307, where the 200 DMA is. For gold to show better behavior. And for silver, I've been extremely bored of explaining how much it's actually not doing anything. You can see it here, and it's coiling more and more. So I think that at some point it's going to break out, really emphatically, but it's not there yet. I mean, it's just simply stuck. I mean, if it keeps on like that, I might start forgetting to check the chart on a daily basis. I did the whole going through the metals thing because I wanted to finish with copper. And why is that? Is because copper is actually trying to break higher from here. You can see we're getting another attempt of breaking higher from here. Ultimately, this 317, 318 area is going to be an area of significance. If you remember, I've kept saying multiple times that I do favor a break to the upside. I still favor a break to the upside. And there is a chance that we might be seeing something like that manifesting, within the next couple of days. So I'm keeping a very close eye to this, a very close eye, because we're right on the resistance once again. So, I'll keep paying attention to it and I'll let you know. This week there is GDP from Japan. Maybe it will move JPY pairs more than a risk on or off. Yeah, it can. It can if it comes quite outside, the expected range. Of course it can. Of course. But I don't like to trade data based on predicting if it's going to underperform or overperform. I have to be honest with you. I've traded data several times in my life, but only in a very specific manner. And what manner is that? I like to take the opposite side of the market when the market considers the probability of something happening extremely low probability, while that event might actually be more likely than the market discounts. So examples are Brexit, the Trump election. I don't mean that I traded both those events. I'm giving examples. In general, when the market considers something a given, so in essence, it's not pricing it at all, but for any reason, I have a feeling that that's an event that might have like 20% chances of happening or whatever, then I will very gladly trade an event in advance, because if actually the expected thing happens, the market will move very little against me. But if the unexpected thing happens, then you get a very, very big, brutal reaction in the direction of your trade. And also fueled by the fact that the market was not prepared. So there are a lot of stop losses, in the wrong direction of the move, et cetera, et cetera. So that ends up fueling and exacerbating a move to the opposite direction. Let me see if we have any more questions. Actually, let's have a look at the crosses before we pass it to Dale. New low yesterday in the Euro Aussie. Next target, I'm just reiterating what I said yesterday. Next target, the 152 area. Euro Kiwi still consolidating after breaking below this channel. I do think that if it also breaks below this horizontal support zone, we're actually at the bottom of it now. It should accelerate lower, and we might have decent more downside to that. Let's have a look at the pound Aussie and the pound Kiwi. Pound Aussie hit our next target, which was the 78.6. Very, very healthy rebound today, back to this area of support, testing it as a resistance. Obviously, this move has already been more than decent. We went from 185 almost to 174, right? So I don't think that the reward risk ratio is any more appealing to be short. It would be nice to try to be short once again after seeing some kind of a corrective pullback. Pound Kiwi, same deal, flirting for several days with this horizontal area of support. It was looking like it might be breaking it yesterday. Today, so far, we're reversing the vast majority of the move we had. But bottom line, we are holding this horizontal support zone. So as long as we do, we don't confirm another extension to the downside towards 186. I do think that we will get down to 186, but perhaps we need to move higher before lower once again. Okay. So Dale, did you find your guest?
Yes, Steve.
Okay, perfect.
He's here.
Enjoy the interview, and
Okay,
I will be back here tomorrow.
All right, great, Steve. Thank you very much. Stell, thank you. Blake, thank you. Matt, I'm going to pass you the baton, and you'll be the presenter. I'm not sure if you brought charts to the show, or it's just going to be audio from you, but I'll find out in a minute. Everyone stick around for Panama Orange. I know guys out there used to stick around for Panama Red, so stick around for Panama Orange right now. How are you, Matt? So you unmute your mic.
Dale, yeah,
yeah.
I hear him. I can hear you, Matt. Are you going to be? Did you bring any charts to show, or you want me to show mine?
You can show yours. I'm on my phone, and I'm not that savvy with GoToMeeting. I'm used to like Skype and other formats.
Okay. So you got it.
I'm just trying not to crash or back out accidentally or anything. Okay. So it's a whole different. Every time I come in, I've only used GoToMeeting like once every few years.
All right.
And
are you driving right now?
I'm not. I'm stationary.
Okay. All right. Good. All right. Wanted to ask you. All right. So why don't we get right to it, and I could go to the chart. I know you pay attention to metals. Silver's been sideways forever. I think you talked about a diamond, and the breakout happened, lasted a day or so, and now we're back in this range. What are you thinking of PMs in here, Panama?
Well, the diamond pattern is big. That's a multi-year monthly pattern. If you go out to the monthly, the weekly, really. I have a lot of fundamental feelings on silver that are pretty well foundationally. Let me just to go back to if anyone's hadn't heard my presentation last time. I've been on stock splits, like 10 years. And just to give a real quick bio, I was actually on the police in Hurricane Katrina in 2005, which I talked about previously. I'm not going to go too much in detail on that, but that did kind of give me an appreciation of the fragility of systems and how quickly things break down, and the dangers of going with consensus. That doesn't mean I'm always contrarian, but it does mean that things are getting increasingly fragile the way they're set up. And, going back to, silver, of course, is pushed around by the FX markets. And you guys talk a lot, I could see, about FX markets and currency. And that jobs report Friday, the thing that was completely glossed over was that the prime age labor participation actually went down, age like 26 to 55. And that level is about 4% lower than the highs in 2007, even though the stock market is 10,000, the Dow is 10,000 points higher than that. And that's a really sort of untenable situation, because you keep hearing, labor participation is going down, but they keep saying, well, that's okay, it's just retiring baby boomers. Well, even if you want to say it's just retiring baby boomers, very few people are retiring into more money. Very few people are getting their pensions, getting Social Security, whatever, and then having more income, either having 80% of your previous income or 70%. It's a step down. So that first of all, that's obviously a negative for the economy. And we've heard other people like Harry Dent come up with scenarios why that's bullish for the dollar. But we see in Japan,
Matt, you'd be interested in my retirement plan. Do you know what it is?
Soylent Green? I don't know.
No, just slumping over on my keyboard. What do you think? You like that? Zero commission for that plan. Unlike other, it's not an annuity. Anyway, just another option for you.
Right. Well, going back to the fundamental basis for silver and why the economy is weaker than it looks. The second aspect is that housing right now, and there's been a number of articles about this, the gap between house prices and wages is much worse than during the last bubble. Like it is, and people just, that's obvious. You don't even, people come up with excuses for why they'll keep going. But when easy credit, when the Fed kept printing, when the Fed kept pushing rates down, people go out and they buy real estate. They do that in China. They do that in Europe. They do that. Show me any country in the world where credit gets loose and people go out and they buy more real estate than they should, and they start speculating in real estate. Every time, every culture, same mistake every day.
So do we need a full-blown financial crisis worse than 2008 for these metals to perform? And if it is that bad, perhaps it would be deflationary.
I don't think it would be deflationary this time, especially with the thing about metals is before 2008, when metals went down with stocks in 2008, 2009, they hadn't been crashing like this, especially silver, for like 7 years in a row. So we already had the crash in silver that was so bad that they're now mining silver, and they've been mining silver for years beneath the cost of, they're selling it for cheaper than it costs to pull out of the ground. It's
Okay,
net loss. They're making no
underproduction.
money.
What's their
Right,
break
and
even? What's their break even? About 17?
well, based on the spread of different articles I've read, it's estimated to be about high 16s to low 17s because of the
Okay.
cost of oil right now. It's through the
Right.
roof, and the cost of petroleum distillates, and the cost of running a gold mine, running a silver mine. The main cost is always energy and oil. Always.
Right.
That is your main cost. No one's plowing mines of Teslas, or there's no clean energy way of getting metals. It's a very dirty, energy intensive process.
Okay.
And right now,
Good point.
based on and too many people that talk about the gold silver ratio, but if you really look at the silver to oil ratio, silver is now cheaper than when it was $13 when it crashed to in late 2015. Because back then oil was like in the 30s. Oil was half
Right.
of what it was now. So back then you could say, yeah, silver's 13, but look, oil is like $30. So, and look what silver did after that. It went from 13 to like 21 that summer, like a lightning bolt. That was an insane move. And that was just because of the panic of Brexit. That's all it took. And it's the same sort of setup in silver now, where it doesn't need a full collapse to go higher. And there's so many scenarios that could take it higher.
What's your favorite one? You think is like on the horizon, near term? Could it be something with Iran?
Well, I personally, I think people are focusing too much on Europe right now. And just to step back a minute, I really became a big metals bull in 2015. It's funny. I found out Jesse Felder, if you're familiar with him, and he's on Twitter, and he used to work for Bear Stearns, and he's a pretty prominent commentator. He too became a big precious metals bull in 2015. So I'm not like a perma bull. It's more of one of the things I kind of woke up to later. And I didn't like the bubble in 2011. Really kind of repelled me because there was so much obvious pumping, and there was the Alex Jones crowd and the Zero Hedge crowd, who now chase cryptos, which is kind of funny that they just completely lost interest in it and chased another bubble. And then look what that caused. 20,000 in Bitcoin, and then it went to 6,000 so quickly. Just like in 2011, when they actually caught the silver spike in 2011 was caused by the YouTube gurus and all these pumpers who sent it up to 50, and then that caused a crash down to 26, and that went into the teens. And they're not going to be around. So many of them have given up or gotten wiped out, or they're not going to be around for the next leg up. And that's why the next advance in silver is much healthier, because it doesn't have all those sort of sleazy people that kind of repel you, like when you want to buy silver and you see all these people being attracted to it, or who are kind of and they've been cleaned out. And that's why the metals market now, as of like 2015, when the capitulation really hit
different hands now. So more of the institutional, professional accumulating now. Is that what you see?
Yeah, and that's why gold has been the gold silver ratio is so high, and why gold's been doing better. Because if you're Russia, if you're China, if you're a big institution or a bank, you might like silver, but you're going to buy gold because you have so much money you can't store all that silver. So that's why you see the institutional money coming in first, buying gold, and later on, silver will go up with gold.
How about the hernia factor in moving around your silver coin bags?
Well, silver is.
I mean, they're pretty heavy, aren't they? Have you lifted one?
They are. They're heavy, but the thing is,
that's what I'm saying. What about the hernia factor in owning physical silver coin bags?
In a sense, though, that kind of adds to its security, because it does.
It does. You're
because
right.
A burglar could run off with. A burglar could run off with $100,000 in gold. They could literally grab $100,000 in gold and run with it.
That's a great point.
They'd be lucky to run with they'd be lucky to run with $5,000 of silver. So, and also if a disaster hits your house, let's say a flood hits or a plane crashes into your house or something really seismic hits wherever you're keeping your silver, you'll be able to find your silver. It's not going to get, sprayed away, washed away. It's that density of it, it's almost like its own safe to an extent. The weight, the heaviness, it's another thing about silver is people overestimate how much damage tarnish does to silver. Silver does tarnish, but when it tarnishes the very outer atom layer of that silver, like a very, very tiny. That's why
you're like a numismatist.
These are things I've learned from self-study in the last few years, really getting into it. And a lot of it too was the whole, if you've heard the term the everything bubble right now in real estate and stocks and bonds, and the only way to bet against it is precious metals. There's no ETF. Maybe someone will make one. That'd be nice. An ETF that's 20% short real estate, 20% short bonds, 20% short the dollar, 20% short stocks. There isn't. It does not exist. But gold and silver are kind of synthetically, they are that ETF. That's sort of the contrary, the counterbalance to everything else. But
I like that.
I do want to touch on the whole thing where people are getting, I think, a bit too focused on Europe right now.
All right.
I'm not a Europe.
Because of Italy?
Well, because of Italy, but here's the thing. Italy, Portugal, Spain, these countries since 2010 have been, whining and complaining about how they want to leave the euro because their whole economies in the outer edge of Europe are based on tourism. So all these little countries have this fantasy. They'll leave the euro, they'll come up with a super cheap currency, and then tourists will just flock in for your super cheap currency. But that's not how it works. If you have a super cheap currency and economic problems, and you have people, crime going up in the streets and robbing people, no one's going to want to come visit. There's plenty of third world countries where the currency is super cheap, but people still barely visit because it's dangerous. So they kind of, and it's this fantasy they've had, and also the logistics. Like years ago, Greece is going to leave the euro. Well, they got to go back to printing their own currency, and that is so, in the modern world, going back to an old currency is much harder than it was 50 years ago, 100 years ago, because then you have to create the electronic equivalent and link up to the SWIFT banking system and all these other, electronic systems, and everyone's software has to change. There used to be a time where you could literally
easier said than done.
It's harder now than it's ever been to leave a currency. Once you get in that currency, it's like a Roach Motel. You can fantasize about leaving it. And that's why.
It's like Hotel California.
Yeah, it is.
And the mafia.
Of course,
and the mafia.
And the issue with Europe is that it's been in kind of a state of panic in terms of sentiment since 2008, 2009. There's never been a mania that's come back. The average person hasn't been excited about European bank stocks or buying Europe. So crashes don't usually come after 10 years of panic. You have 10 years of panic and then the crash. The next crash is not, it's going to start where crashes always start, where the optimism is. Show me where the peak optimism is, which is obviously the US and the NASDAQ and other tech stocks. Yes. That's where crashes manifest out of optimism. And that's one reason really under Obama for 8 years, we had lots of mini crashes. We never had quote unquote big crash.
Let me ask you this, Matt. I asked some of my team this today. When's the last time you've seen NASDAQ pushing to new highs and the S&Ps couldn't even recover 61.8? The glaring divergence with NASDAQ at new highs and the S&P and the Dow not even close. Is there a market message in that?
Yeah, and that is, there's a lot of small retail traders chasing a small number of stocks, which is a really bad sign and something you see at tops historically. And
I've never seen a gap this big, and I've been around a while. I remember when they first started trading SPOOs, but I've never seen the S&P so far off a high. Even in 2000, I don't think the S&P was that far off the high, even though NASDAQ was the bubble. So I just don't know, what does it mean? The NASDAQ's going to continue to drag up the underperforming markets to new highs, or what happens when you get a NASDAQ top and relative weakness doesn't have kind of like a air to its back, tailwind of all the NASDAQ going up. What's going to happen to markets that are failing to make new highs?
Well, the one big problem with the markets right now is the most confident traders and investors are people who, frankly, watch a lot of Fox News. That's kind of like almost the epicenter of the bubble. And a lot of them are over the age of 60. And some of them are buying stocks, which is something you probably, not something you should be investing in at that age heavily. And that's not also, they don't have infinite pockets at that. You're taking a demographic and having them engage in speculative behaviors that demographic usually does not do. And that happened in Japan to an extent too. And that's, kind of why Japan's kind of our future in terms of when the market crashes again, they're going to devalue the dollar to the point that gas will be like $9 or $10 and food will be really expensive. Well, it'll be it won't be Weimar. It'll be like Japan. It'll be where everything is just stupidly expensive at the expense of saving the banks over the people. I mean, whenever they get into a situation where it's either choosing between helping the average person or helping the banks or helping the big institutions, they always go with the big institutions. But demographically, there is a weird bifurcation. I don't know if you've seen this, but the percent of millennials living at home has been rising, and home ownership is really, it's almost, most people who own homes are over the age of 60 right now. That's why you see those like reverse mortgage ads constantly.
Right. Yes. Okay.
It's so that demographic is doing great. People over 60 have never done this well, but that's not a good, people that age, they don't start new families. They don't do a lot of consumer spending. You want young idiots out and spending. You want people in their 20s and 30s just blowing money. And that's what drives an economy, is people that age doing impulsive, stupid things. And people who are over 60, they're careful, they're more careful, they're more experienced. And, putting money in their pocket is just not, there's this weird imbalance. If you look at like all the gains, for example, you hear about non-supervisory wages and supervisory wages. You look since Trump got elected, the supervisory wages have gone up, but for the 80% of people who are non-supervisory, they've barely gone up at all and mostly been sideways.
What do you think of this real estate statement? And it kind of left an impression with me because I remember it. So, we're talking about all the housing stock shortage, especially on the low end. And you're talking about, it's the baby boomers that have their house and they're taking out reverse mortgages on it. But you think when people talk about housing shortages and possibly, baby boomers passing it on, one thing Harry Dent said, that houses don't die. The people in them do, but the house doesn't, unless it's, left in complete disrepair. So do we really have a housing shortage? Huh?
We do not. We do not at all, especially like here on the northwest side of Chicago, the neighborhood I'm in right now, which I can see the amount of people here who own houses. They average over 60, many over 70, and they have 5-6 empty bedrooms. And that's sort of a situation you're seeing statistically across the country. Lots of baby boomers sitting with huge houses, tons of empty rooms in those houses. And, a lot of them, because their health care is, they
don't want to leave their doctors.
They're going to live a long time on that, sitting on that. But it's also the property taxes are just killing them. And here's the thing about flipping. We have a higher percentage of house flippers in the market now than we ever did in 2007. And a lot of that has been because of the drop in prime age labor participation. I mean, you look at 4 or 5% less people between the age of 26 26 and 55 are working now than 2007. That's horrifying. That's not a good job market at all. So what do a lot of those people do? Well, they go out and they become flippers, or they become investors in housing. And that's great until you have a rising interest rate environment. And then you've got the property taxes, you got the maintenance. You know, when you quote unquote invest in housing, there's all these other, you can't, first of all, it's an illiquid investment. That's why.
How about the cost of buying and selling, even if you get a good deal, like 1.5%, 2% in and out?
Oh, that
pretty
too.
heavy
That on
cost,
top of the
right?
maintenance, on top of the rising property taxes. You look at almost any big city in America, and property taxes are just going up constantly because, you know, their pensions are underfunded and their infrastructure is falling apart, and it's this black hole effect of you can only, you know, you have to invest near a city, but then when you invest in a house near a city, your property taxes are just through the damn roof. And that doesn't even count the maintenance and everything else put into it. Whereas, like, if you invest in precious metals here at their cost of production, I guarantee you, you know, there's some houses near me going up, $700,000 houses, wood frame, ugly as hell, and those houses probably cost 30 grand to make.
Right.
That, where if you're buying silver right now, you're buying it at the cost of pulling it out of the ground, actually a little cheaper. So you know you're getting it at cost, so to speak. You're getting it wholesale.
Another good point.
You know, but here's the maintenance of gold or silver, whichever you want to buy, compared to the maintenance of some real estate you bought, it's not even in the ballpark, because exactly, it's like gold is indestructible. You could literally hide gold in your oven, like in the broiler under your oven.
Well, hey, you know, I do recall a tweet, and it was a great tweet. Maybe it happened a little later, but you were talking in gold that we were going to have a quick washout under 1,300. Remember that? And you said, but it wouldn't last long. Okay, so great call. The event happened. I think I had a 1286 number, went there. Are you impressed with its recovery after that washout, or were you expecting it to rebound, come back faster after the washout?
At this point, I really think silver, you know, I like gold technically on the chart.
Well, I'm just talking about this day. You called it right here. If you look at the screen, you're saying, okay, I'm looking for a quick washout under 1,300, maybe 1,290, 1,280, but it won't last long. So this is the event, and here we are now. Hasn't done anything wrong yet, you know, up and pulling back here. But are you a little surprised that we didn't have the kind of rebound once we took out the 1,300 bulls? We were only able to close back above it once. And does that give you pause, at least short term? Because I know you're talking long term, but I've seen some of the charts you sent me either through DM, mainly mostly through DM, but you also have some shorter term views on the action of the market. How do you think gold's acting after that washout? It's right in front of you.
Well, I think a lot of that has been because of the move in the currencies and the FX. We had this European panic come out of nowhere the last few months.
Strong dollars inhibited it.
Right, which was on top of, you know, like I said, I think the Europe story is so played out over the last 10 years that it's like, okay, it's nobody's surprised to hear anything bad out of Europe. Nobody wakes up, hears something bad out of Europe, and goes, oh, I had no idea. You know, so I think the FX markets are really kind of overreacting to that. And that does, you know, that might change the scenario of having that quick bounce. I do think that you were talking about the peace summit or with North Korea. You know, once that was announced like 3 months ago, I think it was obvious that was going to happen because North Korea leadership has no ideology except, you know, they want to be rich. And they want, you know, champagne, and they want the North Korean leadership's been like that for decades. So when they say, hey, we want to cut a deal, give us some stuff, as long as you give them whatever they're asking for, give them some, you know. So once that was announced, that was definitely going to happen. There was not like we're going to go to war later on or it's not going to work out. That was 3 months ago. So yeah, every day Trump and you know, Fox and everyone, they're going to say, wow, you know, this big peace deal. But you can't keep bringing that story up every day and act like it's going to have the same impact. You know, it's getting a little, that's getting a little dragged out as well.
Yeah, well, so maybe it blows up then. Because
I don't think
everyone
it
thinks
blows
that
up. I think, I heard years ago there's an interview with
it's going to be a get to know you meeting, is what he's saying. You know,
it's
getting to know you, getting to da about you, Kim Jong Un.
well, they're very similar. Trump and Kim Jong Un. If you look at like how they having the rich dads and their style, it's very, they're not going to have a problem getting along. And one thing I was saying, and this is, I was a big fan of Jim Rickards. I have been for years. So you're familiar with Jim Rickards.
I interviewed him.
Yeah, I'm still a big fan of him. But one mistake I think he made was he had a lot of sources in the intelligence community, and he was very committed to there's going to be a war with North Korea scenario.
Yeah.
He got a bit too locked into that. And I was always saying, even last summer, if there's ever a war with North Korea, it would be us hitting them with hypersonic missiles, and those hypersonic missiles would take them out within like the first day. They come in, many times the speed of sound. You can't see them on radar. You can't see them visually. We would use very low yield nukes, bunker busters. And there never would have been, even if this went hostile and we never had a negotiation, there never would have been a big war with North Korea. It would have been like a 2-day war, a 1-day war, or a peace deal. So there was never a scenario where it was going to be the next big war. Like we could have the next big war with Iran. That could absolutely happen, especially after the embassy, the whole shooting around where all those protesters were shot near the embassy. And if you're the Iranian leadership,
John Bolton.
yeah. Well, if you're the Iranian leadership, it's not a good look to be negotiating with the U.S. when the Mideast whenever Israel does anything, the Mideast blames us because we still cut really big checks to Israel. We give them a lot of money for the military, for their equipment. So anything they do wrong, we're going to get blamed for it. It's like they'll drag, it's even if we didn't tell them to do it, we didn't authorize them to do it, doesn't matter. We take the blame. So the next big war.
Well, it's easier for us too now because Obama distanced himself, did not approve moving the consulate to Jerusalem, and didn't make his first trip to Saudi Arabia after elected. So it's kind of.
But he kept he kept the checks coming to Israel though. He never cut off the funding.
Oh no, he's the best president Israel's had in a long time. That's what I'm saying. So they have a reason now. They have a bigger reason when Israel runs afoul with our kind of overt support of them by moving the embassy there to Jerusalem and by cutting off the peace deal. The media can play it that way, that, this is overt support for Israel. Yes or no?
I think, I think all Trump had to do was at least tweet or say like, hey, you probably shouldn't have shot that many protesters. But he didn't. He could have just at least said like,
right.
Well, like when he pretended to be mad at Assad so many times, when he blew up an airstrip a year ago, and then, a few months ago, he blew up an empty warehouse or something. He at least pretends to be mad at Assad. But like when Israel shot all those protesters, he didn't even pretend, you have this hard line appealing to the evangelical vote, which in 2018, I'm not sure that's really the way to go. To the hard line, most of the world doesn't want to see unarmed people getting shot. And the way Israel should have dealt with this is they have a lot of money. They should have had a well-equipped riot squad. They should have pepper gas, rubber bullets. Shooting people just with rifles, that's 50, 60 years ago stuff. In 2018, if all this modern non-lethal technology, at least try that route and don't go straight to the shooting people with slingshots, because that, even if you're right and that's your border or whatever, you're going to look. And this is the same thing with all these police shootings where if the other person's unarmed and you're armed, even if they started the fight, doesn't matter. If you shoot an unarmed, if that's the story that a person with a weapon killed a person without a weapon, it's never going to look good for the person who had the weapon. Doesn't matter what really happened or if they're punching you. it never, you can't ever spin that in your favor. It always,
Okay.
It's always a losing argument, and we're making that
Let's
losing
wrap
argument.
it. Let's wrap it with something tangible. Best buy zone for gold and for silver in the coming months. Right here.
Well, I said
Buy
after
gold.
the jobs.
Go ahead.
Yeah, well, I said after the jobs report Friday, you know, I don't think silver's going under 15 again, like ever. It could go under 16. There's nothing magic about the 16 level because we've gone under that 16 level like so many times in the past few months and pop back above it, come back under it. So 16 is not like a concrete floor for silver at all. But I do think anywhere in the 15s, what you do is you go to AppMex or you call them on the phone. You know, they got great customer service, or SD Bullion on the phone, great customer service, and you buy generic bars, or you buy. You know, SD Bullion has a deal that I linked to on my Twitter stream. I'll link to it again, but they have a deal where they have random coins. That's not rounds. If you go into a coin shop, the best you'll get a random generic round for is like $1 over spot. But SD has coins, which a coin just, you know, that means it has a government backing on the back, you know, from Canada or from Australia. If you're looking to get in the silver, the best coins, the best cheap coins to buy are the Philharmonics, the Austrian Philharmonics, the Perth Kangaroos, or the Silver Britannias. And you can find all these for about 170 over spot, 160, 150 on sale right now, like Provident and SD Bullion. And these are great coins. You know, Eagles tend to be a little overpriced, I think. They're very high mintage. But the Philharmonics, Kangaroos, and the Britannias, you could always find those somewhere on sale for a little under $2. But the best customer service I've found for buying physical is SD Bullion and AppMex, but you do have to be home from like 9 to 5 to answer the doorbell and sign for the package. So if you can't do that, if you can't sign for the package at the door, then find a local coin shop, you know, find a few, price them around, and just buy generic. Because when you go to a local small coin shop and you buy, you know, coins, they might have Britannias and other things, but they get the small shops tend to kind of overprice coins.
Right.
You know,
Right. Because
a
they don't have the
generic,
volume.
They don't. It really, it's kind of a death spiral because they have to charge more money to keep the lights on, just like we have this retail apocalypse going on, which explains why the labor participation is through the damn floor for people aged 26 to 55. And you know, we have this fantasy the jobs market is heating up and improving. There's no way in hell, and I haven't seen one economist make the argument how people aged 26 to 55, how could be this low and like 4% lower than 2007 and going down on Friday at the jobs report if the job market is improving, because that is the prime age they should be working in that age group. But you know, not to get too far off, but yeah, anywhere under 16, I think silver is a buy.
Okay.
And with gold's a bit trickier. Gold is trickier because it's about $100 over its cost of mining, or like 90, 80. It's not, unlike silver, you're not getting it for the cost of mining, but you know what? That's still stupid cheap. There's very few products you could buy for that low of a profit margin. So gold is not expensive either.
What's production price? 1180, 1200 in gold?
High 1100s, yeah. So if gold were to say go to like 1190, it would then be as cheap as silver is now. But the problem is if gold goes to 1190, silver is going to be like 15, and once again silver will be cheaper. You know, but that could change. You know, silver could decouple, and then
here's where I think silver could go if gold goes that low. 1450 is a target I have here. So I've won at 1630, and the big bear case, if gold does fall to production value, which some people think it can do, which is down here. Those were the lows that right here. Right here, 1180. Possible. You know, I've come to know everything and anything can happen. But great advice.
I don't think silver will close another day. Well, just to squeeze this in, I don't think silver will close another day under $15. It might go under 15 intraday, but at that point, that's when you see some real buying in silver.
And great advice that he gave. Great advice he gave the community on, you know, price levels and what kind of coins to buy to take possession of. You've done a great service for people that are naked without any precious metals in their possession. So I want to thank you again, my trading warrior brother, Panama Orange, and keep in touch with us, and we'll do this a little later on. Maybe we'll have some action here between now and the fall.
Okay, well, I appreciate you having me on again.
Okay, Matt, thank you very much, everybody. That's a wrap for Turnaround Tuesday. The Turnaround Tuesday trade, how's it working? You know, S&P is from 2748. Looks like we could get a third drive up here. So you had 4 or 5 handles. I'd be looking for a potential another short up here. Here's 1, here's 2. I think it's worth a shot. Maybe 2755-ish if it gets back up there. Anyway, that worked for at least a day trade. I'll see everyone tomorrow, and have a great day, great session. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. You're welcome, Ed.